Hi there, I'm Ken Odeluga. I'm a market analyst at City Index in London, and I'm here to give you my contribution to thoughts on markets right now. And as you all know, we live in interesting, some would say relentless times, what with geopolitical upsets worldwide, and looking to Washington, potential political disruption that could have severe impacts on markets going forward. As well as, on top of that, fears that the clearer economic slowdown that we see in parts of the world could at some point reach the United States. But for the moment, I think the main thing to bear in mind, aside from all that, is about the trade talks and the trade conflict on a broader way of looking at it. We know that talks, the first substantive talks for many months, are going to begin at the end of this week between the United States and China, and these talks are going to take place in Washington. I think expectations are fairly limited about what can be achieved, but on the other hand, I think if the negotiations or discussions can conclude with the expectation that further discussions can be scheduled fairly soon in the future, and perhaps some main pillars can be laid out about which direction those talks will go in, these talks will be deemed to be positive. So we want to look at the impact on markets of these talks, and we also want to look at markets right now in the run-up to the talks to see how they may react in the very near future. So the first market we're going to look at, and I think this should be coming on your screen fairly soon, is the Dow Jones Industrial Average. Now, the chart that I've got on here is, in fact, the Dow Jones E-mini futures version of the DJIA. So it's a tradable version, and it's highly popular. It has a huge amount of liquidity. Now, the first thing I want to draw your attention to is on this chart, you can see what we analysts call a coiling type pattern. Now, the coiling pattern is, it literally looks like a coil if you, with a bit of imagination. And it usually is sort of encased in two sort of like lines that form something like a wedge moving towards the apex. And the coil part comes in because price appears to sort of rebound around within the wedge and point towards the apex. Generally, I would see this as bullish. And it has been bullish throughout the year. It's provided a channel over which price has run and has enabled the market to rise higher in quite a predictable way. Now, the less bullish aspect is, of course, that if you look to the right, to the left of the screen, you'll see the 3rd October 2018 high, which has been the limits of the market, with give or take a few points for the year. And it's butted up against that a couple of times, bounced down to the lower trend, butts up to the top again, and come down again. I think what this is telling us is that the market has room to the upside, but it has yet to prove that it has the momentum to break through the rising upper channel. If we look to our second chart now, what I've got here is the pound traded against the yen. And the reason why I've chosen this is fairly obvious. I mean, we've got, this is a sterling chart as well as a yen chart. So it brings in the idea of risk aversion, of which has been quite a bit around at the moment. And of course, we are moving towards a situation where the United Kingdom could either see a massive political disruption in coming days or, see that disruption delayed. As you can see, when this rate falls, that is in favor of the yen. And as you can see, the trend is fairly clear from those highs earlier in the year. And it seems to be that the price is continuing to trend down after a recent attempt in recent days to break out of this descending wedge. Has fallen below the wedge again, and I think what this price is telling you is that it's going lower, back to that lower support that was established early in September. I think that wraps it up from me, and thank you very much for listening.